There's an old saying that says, sell in May and go away. Well, you could have sold in January and gone away, and you'd be better off than you are now. The market for the year down about 7 or 8% or thereabouts. Certainly some big stories that have been brewing in South Africa. Company-specific stories. Steinhoff continuing to bleed value. It's worth almost nothing relative to the size that it once was as South Africa's 6th biggest company. Its African arm, Steinhoff Africa Retail, announcing plans to revert to its original name, Pepkor, to put huge distance between itself and its 71% shareholder Steinhoff. It wants to try and get rid of the scandal-ridden parent. I'm Bruce Whitfield. This is Taking Stock, and I'm taking stock of these and other market movements with the Chief Executive of Vestact, Theron and Chantal Marx from FNB Securities Research. Sell in May and go away. I know you're never a seller because you just like to buy and accumulate, but it's beginning to hold a little bit true. We sort of sell in January and don't come back.
That terrible old line, sell in May and go away, has only been right apparently one out of the last 20 years.
And this is the year.
Yeah. So what now?
Yeah. No, but that's the point. I mean, I want to make. You made a mockery of it. He made a mockery of it.
He did.
He made a mockery of it. Because people come up with these stupid lines. I mean, May was a negative month. It was a lousy month as far as investors are concerned. But it means that June and July might be better.
Yeah, I mean, also. I mean, what weak markets actually are is a buying opportunity. One mustn't be too cynical and think that it's going to be this way forever. And especially in the South African context, a lot of this has nothing to do with us. Weaker markets have been a kind of a flag across the entire world. And if you look at the emerging markets complex, South Africa has actually held up pretty well. I mean, you do not want to even know what the Russian market and the Brazilian market has done in dollar terms year to date, not even to talk about Turkey. There's some risk off in the system at the moment, and then emerging markets and growth assets like equities just fall by the wayside.
South Africa's great advantage, of course, is the globalised companies which form part of the JSE. Some 70% of the top 40 revenues come from outside of South Africa, and most of that happens whether it be in Western Europe and Australia, parts of Africa, the United States, Paul, and that's our sort of protection, I suppose, from the other sorts of ills that other emerging markets may suffer.
Now, we have much better companies on average than other countries of a similar scale in the emerging markets. Of course, Naspers is a very big index constituent, as everybody knows, and that is more about what's happening with Tencent. Tencent's been interesting. I mean, it's done extremely well and continues to operate very well and report good numbers, but it's sort of hovering at about 400 Hong Kong dollars per share, and that's a little bit lower than where it was at its high. Remember, Naspers sold a few shares, a couple of executives sold a few shares, so I think partly why our market has also struggled a little bit is Naspers has gone back down to around 3,000 rands a share, which is shameful, embarrassing. I can't believe it's happened. But it's because also Tencent, which makes up so much of its value, has had a bad month.
And the currency translation too, the rand being stronger than it was a year ago, is going to have an impact. Lots of the results coming out, Chantal, right now are reflecting the mood of South Africa in the last quarter of last year. Lots of results coming out, and they're all pretty lousy results. Lots of retailers coming out with bad results, big industrial companies coming out with bad results. Massmart had a dreadful update fairly recently as well.
Yeah, I had a bit of a Twitter war with a few guys as well on this. I mean, it's a little, you can't really expect a massive change in full year results or half year results if you only had about 6 weeks of the new political dispensation in the numbers and the improvement in confidence. 6 weeks out of 12 months is not a lot. So it's most of the guys have said in their outlook statements, well, they're obviously very measured. So they say, well, we continue trading conditions to remain quite strained, but have noted that sales momentum is starting to pick up a little bit, with the exception of poor Massmart. But even in Massmart, we saw pretty good numbers out of the macro part of the business, as well as Builders Warehouse. The struggle there really, Game and Dion Wide, which has been an issue for a while, restructuring costs in those businesses, and then Mass Cash, trying to compete with Boxer and Usave in rural markets. It's almost impossible.
Game apparently is in a bit of a mess.
Yeah.
And that's the real concern within that particular structure. And you wonder at some point whether or not they don't start hiving these things off as conglomerates become less interesting. Let's get to the meat and potatoes of the big story of the moment, and that is this implosion of relationships, the Stella Stellenbosch relationships that led to the creation of Steinhoff, and we saw Christoph Wiese put his businesses into Steinhoff and Steinhoff Africa Retail. It's all gone terribly wrong. Steinhoff is worth 2% of what it was when it was the 6th biggest company on the JSE. And now Steinhoff, Africa Retail, wanted to get as far away from Steinhoff as possible. I mean, so far as to call itself Pepkor once again, Paul.
Fascinating, because it's all about timing. I mean, I remember at the end of, the year, but the year before, we had people talking about trying to do the Steinhoff International, Steinhoff Africa separation, and the market was against it. Then they went away, then they came back. STAR, of course, is not a bad name, but it's totally made up. It's an acronym. So I suppose it does make sense to go back to Pepkor. And then on top of that, there's this rather tricky story where the executives within Pepkor are getting their options kind of rebased, repriced. That's caused a bit of a kerfuffle as well.
It's an extraordinary story, and it doesn't matter what the technicalities are and the legalities of it are. It just looks absolutely greedy. You do a deal, you get incentivized with shares that are now worth nothing. So then we go back to a 2011 contract and go, hold on a second, shareholders must pay to top up the incentives of the Steinhoff Africa Retail directors. They don't see it as a problem, surprisingly enough, but shareholders are going to have to pay for it.
I mean, and it's not even only the old incentive scheme. It's 90 million rand a year in a cash incentive scheme in order to retain management. So basically, executives are compensating themselves to stay in the business. It's a little bit.
I mean, surely the concept of markets is you're an investor, Paul, and you decide that you're going to back this management team and you buy shares and the share falls on its face. You don't get a top-up from anybody. You don't have that level of safety. And these are the guys you're trusting to do it on your behalf.
But unfortunately, it's quite common in shareholder capitalism because these companies are quite large. So even though these numbers are also large, it's like a rounding error in terms of the market value. I don't know. As one invests around the world globally, I've seen in the United States some pretty egregious cases of real corporate larceny when it comes to share options, including some of those big and very popular US technology companies where they do a lot of aggressive share buybacks. But when you look at the register at the end, they're the same number of shares in issue. They gave them all to the management team. They're consistently doing share buybacks, but it's all ending up in the executive compensation. I don't know.
Do we have to get used to this and just accept that this is the way the world works? And if these are good guys on a management team, then you just suck it up and hope that they drive value in everybody's interests.
I mean, we do see a lot more shareholder activism around management compensation. In South Africa, it's particularly tricky because we have this huge income disparity between rich and poor, and this just kind of puts a magnifying glass on what exactly is going on there. I wonder what the lowest paid employee at Star actually earns, and then you need to start asking yourself, but is this actually morally okay? And I think we're going to see a lot more questions being asked around this. We've seen a few AGMs go a bit sour with investors voting against management remuneration structures, and I don't think that's going to change anytime soon.
No, it's not. And you do have a choice. As an investor, if you don't like the way in which the management team is running the company, well, you sell the shares. It doesn't solve the problem, but you are making a statement, if you like.
I think institutional shareholders, big asset management companies in this country need to play a more aggressive role, and probably one could start with a PIC, for example. I mean, they've got big chunks of almost every listed entity, and some aggressive moves around executive compensation at this level could be welcome.
What's the best job in the country right now? I think to be a lawyer in Stellenbosch, because they're the ones who are going to make the bucks out of these big, this broeder twists, if you like. More market movers, more market shocks, and more horrors coming after the break. There's a story in the construction sector. Construction companies used to be really big, you know. They built all of the World Cup infrastructure. They did South Africa proud, except they cheated and they connived their way into that success. And now a company like Avenge is worth less relative to its previous value than Steinhoff is even now. 98.5% of its value has been wiped off. We'll talk about Avenge, talk about Murray and Roberts, which has got a suitor, and there's something going on under the skin there as well. That's coming up in a moment.